As a reminder, none of what I say is financial advice. Strictly for entertainment purposes only. This is what I meant by the docs. I haven't had my face on a video in a while. Hopefully everyone's doing well. I look like Drake as I age. Well, I don't mind looking like Drake, but I'd rather be Kendrick Lamar. So anyway, haven't streamed in, I guess, over a week now. Figured it was time to get on and do another casual stream. If you're not subscribed to the channel, do go ahead and subscribe, hit the like button, put me on alerts, because I said a week ago, I want to get back into doing this. I spent a lot of time over the summer doing things away from the desk, but it does open up more time for me to hop on here. I want to stay consistently, but I don't want to anchor myself to any promises as far as doing it 2-3 days a week. And I'll try to do this as consistently as possible. All the platforms that I think are worth using, the things that are not even on the list below. If you ever have any questions, feel free to direct message me. I'll give you what I got. The screen that you're looking at on the right-hand side, that is Woo Exchange. It's a phenomenal exchange, spot, futures, and you also have the DOM. Now, that is a shill. I am essentially shilling Woo. Use exchanges that you trust. The good thing about Woo is it is fully transparent. You have the transparency dashboard. You use the ref link in the bio below. I'm going to use all of the Woo refs generated to donate to a charity of your choosing. I want to cover a couple things right off the bat. So I shared this multiple times now. You guys know I'm part of Synquote. Synquote, up until this point, has been the #1 decentralized options exchange for BTC and ETH. It's a phenomenal exchange, very easy to use. We are now going to be a perp exchange. It's going to offer more than just BTC and ETH perps. It's going to be liquid from day one. Got a bunch of market makers. Yeah, we're looking to be the #1 options DEX, which we already are, and the #1 perp DEX. So there is a trading competition going on right now. This is what I am offering. As it says in the tweet, you could now trade with perpetuals on Synquote. And I'm going to give $1,000 away to one person. Obviously, there's a couple things you have to satisfy. You have to follow me, you have to share this post, and you just have to place top 20. This is Trump's speech yesterday, so we're going to play this. This is just over 30 seconds.
The Biden doesn't even know what it is. If you ask Biden
2 days ago or
sir,
yesterday.
are you for or against crypto? What's that? What the? Get me off the stage. He's saying, get me off the stage. No, he has no idea. But look, Gensler is very much against it. The Democrats are very much against it. And I say this, a lot of people are very much for it. Probably a lot of the people.
Trump's a man of extensive vocabulary.
And I'm fine with it. I want to make sure it's good and solid and everything else, but I'm good with it. And if you like crypto in any form, and it comes in a lot of different forms, if you're in favor of crypto, you better vote for Trump.
So I think it's worth saying that Trump has just a way of talking, which is not using many words and relying on basically the same phrases always. And this is not me dissing him. If I had to choose between Trump or Biden, I wish I could choose neither of them. But I think I favor Trump. Don't kill me for that. He's not a person that I would ever imagine voting for to be in the White House if you asked me over a decade ago. But he said he's for crypto. I think it's safe to say that if it meant Trump getting votes, he would say he was for anything. This could have been a convention of people that are looking to protect a certain type of anteater in a rainforest in South America. And he would say, I'm all for the whatever anteater. Pretty ridiculous example, but I think you get the idea. There is something that comes out of this that would benefit the market, and that is that Trump, I think he looks at the market's performance as sort of a reflection of his own performance. So he values number go up. And then 2, the SEC's crusade against crypto right now, and the SEC absolutely has a place in markets. You can't be so black and white as to say that nothing in this market deserves regulation, or rather that some regulation isn't needed and there are things that are just absolute scams. And we should try to mitigate that as much as possible, while not sort of stifling the growth of a new industry. But needless to say, if Trump is in office, I don't think that we have to think about Gensler anymore. Anyhow, this is Tremp's performance right after. Trump was up like 2x today. Meme coins are still all the rage, and I've been talking about this for a while now on different spaces. And this is coming from someone who was hesitant to get deep into meme coins. I changed my mind publicly on WIF. This was back in January, February, when the hat was put on him. I said, that's it. I can't hate it on it anymore. That's going to be an iconic moment. Everyone sees that. This is super bullish. And I was long WIF in between. I guess it was 28 cents and 32 cents. Don't quote me. It's somewhere in there. The records are there. Dispersion. So the best way to think about dispersion is there is pockets of outperformance, and it's not the case that everything is moving up like a rising tide. So it's not the case that everything is outperforming together, sort of hand in hand. And instead, we have these areas of the market that are performing vastly different than other areas. Whereas in the past, there's been many cases when the market has moved up relatively in tandem. Until new retail is here, it's safe to assume it's going to be like this, where you're going to have these pockets of outperformance, and certain areas of the market will suffer as a result of other areas benefiting because it's just capital rotating from, one place to the next. And it's not necessarily new capital coming in as a whole. Look at just stable coins. Total stable coins hasn't gone up. So we don't really have any signs that new money's coming in. So when it comes to relative performance and just looking at how things respond, what I would do is, let's say you have a set certain filters, 10,000 BTC liquidated. That's my criteria to set an alert for that. I'm looking for some kind of mean reversion play. When you have massive liquidations, it's a book clearing event. It's really important. If you're just going to trade, you should have an understanding of supply and demand dynamics. You should have an understanding of market microstructure, how price moves, what causes price to move, what affects price's movement from a liquidity standpoint. So let's say one of your filters is, I have an alert that goes off every time more than 10,000 BTC in open interest comes off. Well, what I like to do is when something like that happens is I usually reflexively bid things. So what you do is you'd find that pivot, right, where you're looking to get involved right after that event occurs. In this case, we're defining it based on a certain amount of open interest coming off, because usually you'll see based on that amount of volume, based on that amount of open interest, market usually doesn't tend to even continue. And if it does continue, it doesn't usually continue without some kind of attempt back up. So isolating from that point, and then you could see who's the fastest out of that hole. So BTC, there's a couple things worth talking about that I talked about in the last stream, and then a setup that I was talking about the other day that manifested. So I think that's worth going over. And then a setup just recently that is probably still taking place if we still have the fuel for it, but the absorption was there and it was kind of obvious. We're seeing increased absorption because the market is maturing. That's my opinion, not just because new money isn't coming in. So you have dispersion in markets because that's how markets evolve, right? It's not going to be the case that everything in the stock market goes up at once. No, there's pockets of outperformance and underperformance, and it's a market. So what we're looking at right here is BTC. This is a daily chart, but it's with monthly profiles. So what we had talked about is that we had an inside month. Here's the profile for April. Here's the profile for March. This was an inside month. And these setups are really useful for potential mean reversion opportunities or potential continuation opportunities. So in this event, you have 1 month that is entirely engulfed by the others. So it's an indication that the markets are relatively in balance. So they're in balance on a high time frame with a wide range though. Value is being somewhat established between like 65 and 72. Between those levels, it's kind of balanced. So in this case, inside month, you look for either the break of the high or the low, possibly for continuation or for mean reversion, some kind of failed breakdown or failed breakout. It's not a guarantee of any one trade. It's just, here's a great trade location potentially. So we ended up breaking down and back up. We tagged 57. Holding 60 might excite some people. I really want to see 62 hold. There's a couple things worth pointing out that are not just market structure, but I'm looking at getting back within this range. Something like trading back above a high obviously is much more clear. But I think 62, while it was more useful the other day, I think that it has moved higher. I think I'd rather get more aggressive above 64. If you look at this chart right here. So one, we're back trading within the range. It wouldn't be weird for us to do something like this, rip up again, get everyone excited, break down again, and then put in this long, wide range. Either way, we're back within a range, but I wouldn't expect anything more than the range until we do something like hold 72 on a closing basis very constructively. Like price action is clearly done trading below and we're starting to trade much higher prices and there's no signs of going back. But I would buy 72 if we flipped it. 72 is a high price. Well, doesn't mean it's expensive. From a value standpoint, it doesn't mean that it's expensive. If we reflip 72 and you've had this long period of just price ranging, then I'd say it's going much higher at that point in the near future. So we're back within a range. It's much better now that we reclaim this. What you want like after an immediate reclaim like this, that's a really bullish response. What you don't want is price to just bleed back to this. So what happens is you get a bunch of people long here. You did take out a bunch of stops, right? It's a good amount of liquidations. Got a bunch of longs coming back into the market. And now if we reapproach this, it's just very unlikely you see that same level get bid and hold up. And it's much more likely that you see that kind of overthrow lower. So whether we're talking 55, 52. Best case scenario is that price just continues to move up. Well, no shit. But from a corrective standpoint, if you just look at corrections on a low time frame, you would rather, as this thing is starting to trade left to right, which is the only way it could trade, continue to put in higher lows, right, even locally. So the last thing we want to do is, for example, see us come back down towards this low. You just don't want to start threatening that low again. Intraday setups, we're talking about, and this is something that happened. It was a great short opportunity. I'm going to clarify it for anybody who's following and not sure what I meant. You had a bunch of inside value. So weren't inside days, but if you look at these profiles, there's a bunch of overlap. So all value It was between like 63 and we were looking at 64.5 region. So price is very much in balance. So fair value being established right around, let's say 63,700. These just offer very clean levels to trade. No guarantee of what direction, but just a clean level to look for the fights to take place. And in this case, the clean level was a very clean loss and failure to reclaim of the underside of that value area. So if you looked at it from a composite standpoint, and this is value for those 4 days, not an inside day from a price standpoint, but a ton of overlap. Think about when price is tight like that, you're building up positioning. When you really cleanly accept on one side, you're going to force one side to close. So this is the clean retest that you got. You had a breakdown. So you're always going to have people break down shorting, price through back, and then this is your backside retest, and then continue. And I said 61.60, and we actually tagged below 61. So this is a short that I took, and I closed this out on the way back up actually. So I entered in a little early at 63.3, and then I closed it out at 61.2. So wasn't sure if we're going to get the full extent of the move down, but then closed it out when I felt like I might give it back up. So now there is a local trade though that exists because you have this sort of carve out. If we're going to retrade back above 63, you could look at this value area as an area that's kind of, I'd say, just carved out from a value standpoint. So it's usually the case that you'll see that when price reaccepts into a prior value area, it's going to just trade around through it again. So eventually you maybe rotate back up towards 64.5. So, you know, sometimes, and this might not be the best example because so far you have a little bit of wick there. But if we start developing above 63, maybe you have a good tradable opportunity up to 64.5. Brings us to today. This is a good sign for the bulls. This is the first sign that, so you had derivatives and futures selling in tandem, but sellers on futures, as always, did get a little ahead of themselves. So if we look at just a section of price action from the 4th to the 10th, so that move off of the 57 low, rotation back up inside of the range in this retest on the way down. So if you just consider this as like the reacceptance retest, right? Just draw this line. Okay, in that move down, you could see that this is your spot CVD. So spot buying off of the lows, derivatives buying as well, but on the way down. So this is a local low that we're looking at, this local low. Notice that the derivative CVDs have made new lows. So relative to this low, you can look at this on Velo too. So looking at this low, and then looking at, here is the spot CVD. There's less exchanges on Velo. Here's the derivative CVD. So you made a lower low in CVD. So there was more aggressive selling on the right side of that, and price did not follow through. So there was some level of absorption here, bids stacked enough for this thing to not continue down. And, it's a good case to be made for not a lot of it, but a decent amount of that OI having come off, but there potentially being some left in the chamber for us to continue to squeeze up. So if we start rotating up and you start to see those liquidations come in, could be part of your signal to trade back through prior value. All right, so yeah, BTC, high time frame. Again, we're going into the summer. Not very excited. I think this thing could just really continue to upset people. And trades that I'll be part of, right? I'll be glad to long back up to the high of the range, but let's say tag 70 again and then put in a lower high or another failed breakout, and it just being the summer months. We don't really have a catalyst. There's no major inflows that are taking place. I'm gearing up for some disappointment over the next few months. It's not disappointing if you're trading intraday, intra-week, but if you're like kind of drunk on excitement from the earlier portions of the bull market and you can only really tolerate environments of continuation and high vol, you'd probably be disappointed. If you look at, like, for example, just the options market, just look at D-vol. This is continuing to trend down, and it's not even at levels where it was in the past that are considered really low. Going back to, for example, like the end of January and February, just to look at where prices were then. Here's the end of January. Here's February. Here's that period where D-vol was that low. So, it's no surprise that when D-vol is that low, that your daily ranges are really tight. If you looked at like ATRs, whatever ATR you're using, going to be very tight. So just markets compressing. The good thing about this is when you have markets compressing like this, you do have those setups that are really clean. 3-4 days of balance, that's a good situation to get behind. At least there's a good cause to monitor that, or rather the extremes, because you usually get decent trades off of those breaks, right? So if you have 3-4 days in a row that are inside, you know that it's not typical for price to continue that behavior. You know, there's usually a trade there, at least for the next day. Maybe the fourth day average break is 1 ATR. There's just a lot of setups around that, even when volatility is low. But as a whole, the market is not very rewarding during these periods, obviously. Something that I did post about on Twitter was an event coming up, and I used the scene from Ex Machina, hoping that people would get it without explicitly saying it. But you have NVIDIA earnings coming up. That's probably a good reason why you're seeing people right now bidding render, bidding AI. I mean, they've been consistently performing well over time now. If I was going to guess what render is going to do leading up to that, we have maybe a week and a half left. I think maybe you get a little bit more of a chop at this level, and then I wouldn't be surprised if render continued back up to that 13 level. But I do think that it's a catalyst to be long into. Like everything else, would I expect that render is going to continue to outperform into the summer months? No, I don't. I'll be selling my AI positioning right before earnings. As far as some other things go, WIF can go both ways, as everything can. It is important to know that WIF has a lot of attention. There's talk about it being added to the meme index. I think it's up there with Doge now. It's going to take a few more years of success before it could be really cemented in that position. But I wouldn't be surprised if WIF had a couple cycles of outperformance. But it is worth noting that memes from prior cycles have not continue to do well into the future. That being said, we haven't had a crazy meme cycle like we do now. I can understand someone making the argument for Bitcoin not having as big corrections as it did in the past. Kind of eliminated a little bit when you consider the 13Fs came through and weren't that inspiring when it comes to institutional investors. A lot of retail obviously were behind the ETFs, but they are getting started. The bank, got the name of it, picked up $40,000 worth, which was a joke, very low amount, but they're getting involved. It's still very early if you just consider where BTC is from an institutional standpoint. I think it's dangerous to say we're so early with everything, but I can understand why Bitcoin might not have the same types of pullbacks in the past. But WIF has only had a 60% pullback. Do I think we're in a new paradigm where in an alt cycle, they don't have 80, 90% pullbacks? I don't know. I think that's really dangerous. Let's say 80% pullback. WIF coming back to $1. I know it's going to piss people off, but history is a pretty good teacher in that regard. And I think it's really tough for any alt to escape that detour. So that is dangerous, right? Because this does look like it's setting up for maybe another expansion up. Now, I should say that I've been long WIF. I've taken some off here and there, but I'm bullish on WIF for the remainder of this cycle. And I don't think the cycle's over. I am a little bit mindful of the fact that we haven't had major pullback yet. I think that something like this, with these marginally higher lows, you get really comfortable dragging stops up and entering in on the slightly higher low. And until you have one sort of, maybe it ends up like this. This is the breakout, which is great because if you longed here, you still return a ton up to that 450 level. But do you really take off the gas pedal at that point? And then this is the one that has the major puke, and then you get that alt chart that looks like that. How many times have you seen this, right? High time frame chart like this, final breakout, everyone on the wrong side of the boat, wipe out, liquidation of all those stops, and then resumption with less people riding. It's worth keeping in mind. I said this today, I think we're kind of in a similar situation that Bitcoin was in summer 2021. Big bounce after big bounce, engulfing bounce after engulfing bounce, until everyone was exhausted and everyone was just beat down. And it looked like every bounce was the one that was going to take us back up to this point. You have this little range is forming. Then this low is taken. Oh my God, this is reclaiming the range. This must be it. And then nuked again. And then, oh my God, maybe this is the one, this little W bottom, and then nuked again. Not nukes, but just abusive. I don't think we're in this situation. Yeah, so I don't think we're at the end of this correction. I think we have more abuse to come. I think there's going to be good pockets to be tactical trading. I would be really surprised if we corrected now and then it made a new all-time high and continued up over the summer. It's sort of like if you know that your car only has 5 miles till empty and the gas station that you need to get to is 50 miles away. You're not going to bet on that car just gas being manifested in that tank before you get to that gas station. You're going to get to that gas station somehow. Right now, it's not happening. You drive a few miles and that thing is going to be empty. Then you're going to need to go get the gas. But that's like kind of where we are when I feel like where we sit within the season. If I could have any one tool, and I'm not limiting that tool to how it could be used, it would be a volume profile. Seeing where people are interested in trading, not just from the standpoint of where price is spending time, but where there's actual volume being transacted. Even better if I could have a more atomized view of that and see how many people are buying, how many people are selling, and having that breaking down in terms of the delta between buyers and sellers. I would pick volume profile over everything. So do I pair volume profile with tape and DOM? Yes, this is my setup right here. This is the volume profile for BTC after the session. This is the volume profile on the ES. It's a bit of a different story when you're scalping off the DOM. You want to make sure that what you're acting on is very accurate and it's based on actual volume. But yeah, I think I'm going to wrap it up, guys. Don't be one of those people trying to call the bottom on ETH BTC. Do I think ETH will eventually have its day in the sun? Yeah, but it ain't today. And it wasn't yesterday and it wasn't the week before. All right, guys, enjoy your, I guess, weekend, because don't spend your Friday in front of the desk. And I'll see you next time.